Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US and European stock futures fall after President Trump dials up trade tensions, threatening 30% tariffs on goods from the EU and Mexico. Bitcoin surges past $120,000 for the first time ever. Tariff diplomacy, the EU looks to step up engagement with other nations hit by Trump's levies, while delaying its own countermeasures to allow more time for talks with the US. Plus, President Trump says the US will send more Patriot air defense batteries to Ukraine to help defend against Russian attacks. Good morning. Happy Monday. So, a ratcheting up of tensions on the trade front. Is this another ploy by President Trump to exact more in these negotiations? Or is this the number he's landed on come August the 1st, 30% for the EU and for Mexico? European stock futures then down 0.6%. After, of course, we reached record highs globally across equities in the earlier part of this month. FTSE 100 futures currently flat, range bound for the FTSE 100. We have earnings season, of course, kicking off later this week. S&P futures looking a little softer as well, down 0.5% on the S&P 500. Nasdaq 100 futures looking to drop around 94 points. Let's flip the board and have a look cross-asset then. You have the dollar bid, and of course you have those incredible gains that have come through for Bitcoin as well. 441 right now on the US 10-year, largely unchanged on the benchmark. The attacks on Jay Powell continue, of course, from the Trump administration and the president himself. Euro dollar at 116, down on dollar strength for the single currency, a little softer by 0.1%. And Bitcoin now at 121,200 per coin, breaking through that 120,000 level, up 1.7%, up 100% in the last 12 months. Brent crude above $70 a barrel, up 0.2%. And investors, of course, in oil, keeping a close eye on the trade negotiations and most recent threats around those additional tariffs. So the US president says talks with the European Union are continuing after he raised tariffs, at least the threat of tariffs, on the EU and Mexico to 30%. The higher rate will kick in on August the 1st if trade talks fail. The EU said last week that the framework for a deal was close and has extended the suspension of countermeasures while the talks continue. Donald Trump says trading partners must open up.
So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
Well, Bloomberg EMEA News Director Ros Mattson is here with the details. So a lot more action on the trade front over the weekend, Ros. What does this signal when it comes to the Trump administration, when it comes to the president's thinking as these negotiations continue?
Well, you can get a sense of frustration creeping in, can't you, because these deadlines keep getting pushed back. Meanwhile, Donald Trump was saying we're going to have all these trade deals, or whether you want to call them deals or frameworks, in the bag. And so far, there aren't that many in the bag. Instead, there's a lot of complex negotiations going on. The administration is really talking to multiple countries at the same time, plus blocs like the EU, trying to get any of these agreements over the line. But you've got all these complexities creeping in. I mean, you've got sectoral issues around steel, aluminum, cars, aeroplane parts, chips, pharma, rice, you name it. Non-tariff barriers, other issues. You're trying to pack all this into some kind of broad, at least initial deal, and none of these things are coming through. So he's just now saying, fine, I'm just going to announce a deal effectively by giving you a letter. That's our point here. Come and meet us somewhere here, or by August 1, they're going to be on.
And you talked about the moving of the goalposts. What are the risks for the US in constantly moving these deadlines?
Well, it's very confusing for a lot of countries. You can see trade negotiators exasperated, throwing their hands in the air, saying, we're talking to you all the time, and we thought we were in the middle of negotiations, and suddenly we got a letter. Even countries that weren't supposed to be on the list have gotten letters. And so they're surprised by this, and they're saying, hang on, we thought we were talking in this fashion. Suddenly we're over here with these parameters instead. It's very confusing. And all of this in trying to create some kind of basic environment of trust to have these negotiations. If you keep shifting the goalposts, the trust does diminish. And then that seeps into the broader relationship. And that's also the challenge for the US in the longer term, is it's treating allies and adversaries in the same fashion. And these allies remember this when it comes to other things the US may want down the track in the relationship. And relationship is not just trade, it's also support on defence, working together on common issues like climate change or whatever. And the trust erodes on that front, and the US becomes weaker.
And to your point, we've heard stories, or at least our own reporting, suggesting the EU is starting conversations with Japan and Canada, potentially around coordinating on some of these trade issues. You talk about the letters that President Trump has been sending out to some of their trading partners 2 weeks. Is that done, or do you expect more to trickle through in the days, the hours and days ahead? I mean, how much more volatility do we expect through this week?
Yeah, well, there's possibly more to come, because there's countries that haven't gotten letters yet that could. We saw, of course, the first round was very focused on Asia, and that was also about, again, leaning on these countries to stop transshipments from China through their countries into the US, a very clear message, and focusing on Asia. We've also seen, South Africa, Canada, Mexico, now the EU, of course, Brazil being a special case because of that seems to be more about politics than anything else. But, other countries in Africa, they haven't gotten letters yet. There are still states elsewhere in the Indo-Pacific that haven't gotten letters yet. So there's possibly another round to come. I mean, we do know the very biggest economies, for example, again, the EU, but there's a lot of countries probably still wondering, is there a letter in the mail and when is it coming?
OK, Ros Madsen, thank you very much indeed. Wrapping up what we've been hearing, of course, from the President and his team over the weekend as we continue to see the adjustments in that trade stance in terms of the negotiations, of course. Ros Madsen, our EMEA News Director. Now, the links, of course, to what's happening with the export engine of China on the trade conversation and that relative détente that Beijing and the US have, at least for now, of course. And you're seeing that show up in the data. China's export growth accelerating for the first time since March, driven by demand from key markets and helped by the trade war truce with the US. Exports in June were up 5.8%, while imports rose 1.1%, both figures beating estimates. Let's get more from our China correspondent, Minmin Lo. Minmin, what do we make of the data then?
Yeah, surprisingly strong data there, especially on the imports front, because you're looking at a 1.1% increase. That's the first positive print that we had seen since February of this year. And officials at a press briefing earlier said that expanding domestic demand helped to bolster the import numbers. But it looks like that number is really bolstered by that truce that was achieved between US and China in mid-May, because you look at high-frequency data, we already see that rebound in exports starting from late May onwards. So, of course, the big question then is moving forward as we look towards August 1st, when the levies on many of these other countries start to kick in, especially for countries like Vietnam, for example, that has agreed to this tiered tariff level, 40% tariffs on trans-shipped goods, then that could be a downside risk to Chinese exporters. The other thing I really want to point out is that we got the full year, the first half year data on trade as well, and you break that down into geography, we can see that China's exports to the United States in the first half of the year was down nearly 10% in yuan terms. Imports from the US also down 7.7%. So actually trade with the US had been really badly impacted by the reciprocal tariffs, but still overall export numbers as a whole to all countries is still up 7.2% in the first half of the year. So that shows that Chinese exporters have been really nimble in diverting a lot of their trade to other countries outside of the US.
Yeah, and the diverting of trade, of course, is something certainly that we know EU officials are watching for. There's a potential impact in terms of deflationary impact for Europe, but potentially as well the flooding out of some sectors, and that certainly is a concern. Look, if the trade tensions, we know the trade tensions between the US and China in terms of tariffs have been dialed back to some extent, but what if the status quo continues?
Yeah, There's still a lot of question about what happens next because we're looking towards that mid-August deadline when this temporary truce is supposed to end. And we know that Scott Bessent has said he'll be meeting with his Chinese counterparts sometime maybe in early August ahead of that deadline. Some economists still think it's a possibility that tariff levels could still increase after mid-August. So that's a big question mark there. So there are a few risks for Chinese exporters. One is if other countries agree to tiered tariff levels. Currently, we have Vietnam as the main one that has agreed to that. If this becomes a template for other countries, it's going to have a huge impact on China. But if it's just, select countries, then the impact is not so great because it's just going to shift the U.S. deficit to different countries. The second thing is when you have the tariff kicking in for the rest of the world, you still have a big gap between the tariffs on Chinese goods versus tariffs on other countries like Mexico, the EU. We're looking at 30% now, but still the Chinese tariffs, or rather tariffs on Chinese goods, still at 55%. We're talking about 10% or so higher than other countries. That is going to erode the price competitiveness of Chinese exporters. And in the longer term, if companies start to solidify this shift in their supply chain away from China, it's going to pose a challenge to China's growth prospect and its employment as well. We also have the GDP number coming out tomorrow as well. And currently the forecast consensus is 5.1% for the second quarter. And that takes the first half year to 5.3%, comfortably above that 5% target, which also means that maybe the Chinese government may not be so urgent about rolling out more stimulus in the near term.
OK, we watch for that GDP print out of China, whether it confirms the estimates around 5% in the first half, a little over 5%, and what that means for fiscal stimulus. As you say, Bloomberg's China correspondent, Min Min Lo, thank you very much indeed on the trade data out of China ahead of GDP. Let's bring in Bloomberg's Value Hotel right now for a look at how markets are responding to the latest tariff news from President Trump, with a focus on the single currency, the euro, that's seen that run up, of course, year to date. Does that get derailed by 30% tariffs?
Well, look, you can definitely argue that the euro has been quite resilient over these headlines around a 30% tariff. I don't think the market was expecting a number that high, yet the euro is only down 0.1%. To me, that tells us, one of two things, Tom. Either the market is assuming that President Trump backs away from this by the August 1st date, does not go in to implement it, or the market is frankly still positive about this U.S.-EU deal to come, thinking that, maybe it can get announced as soon as this week, and this letter will just be put to the back burner in that case. There was a worry, though, that maybe this letter would in some way ignite tensions during these trade talks. That could be something that maybe could derail the trade negotiations, as Roz Matheson was talking about. It just erodes trust between these two big trading partners. But to me, just take a look at how Eurodollar is performing this morning. It's looking, it's not taking this 30% seriously. And we definitely had conversations last week, around the table here, some FX analysts saying that we could see euro drop a whole percent off of the letter claiming 30% tariff level for the EU. And we're frankly not seeing that today. So I think the market does still have a hope of a EU-US deal to come. OK,
we continue to watch, of course, how that negotiation evolves. 116.76 right now on euro-dollar, as you say, just down 0.1%. Meanwhile, President Trump and his allies have seized upon a new way to criticise Fed Chair Jerome Powell, his handling of an expensive renovation of the Federal Reserve's headquarters. The heightened pressure coincides with Trump's relentless calls, of course, for the U.S. central bank to lower interest rates.
I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
OK, President Trump's latest lashing out, of course, at Jay Powell of the Federal Reserve. Van, we've seen this, it's consistent, but the new dynamic seems to be that members of the Trump administration, members of his team, are now rounding on Jay Powell and using this renovation story and the cost at the Federal Reserve as a weapon, it seems, to attack Jay Powell. And this is raising serious questions about whether or not he will hold on to his term through May 2026.
Yeah, it's not just the renovations. They're trying to point out that he deceived Congress, that he lied to Congress when talking about these negotiations, talking about these renovations a few weeks ago. Now, it should be noted that it's not just the White House that seems to be hampering on this renovations. It's also those known to be in the running for Fed chair replacement, one of them being Kevin Hassett, saying over the weekend that the Fed has a lot to answer for when it comes to these renovations. Also heard from Kevin Warsh, who's a former Fed governor, also in the mix for replacement of Chair Powell, saying that the renovations are outrageous and that the Fed needs a regime change. Now, we also heard from the White House Office for Management and Budget. The director, Ross Vogt, there wrote an open letter to Powell that was posted on X, calling the renovations ostentatious. He also pointed out specific quotes that Powell had made to Congress regarding these renovations, and basically pointing out that it could be viewed as a deception in front of Congress, picking out on those possibly those quotes that could be saying you were lying to Congress about these renovations. And this would be a new way that the Trump administration could aim to fire Powell for cause. They'd be needing to find a cause to fire Chair Powell, one that isn't political. But now they're harping on these renovations that have gone over budget by around $700 million. The bottom line on these renovations being $2.5 billion. But it really opens up, another question of another route for them to dismiss Powell. And the betting markets are actually reflecting a higher chance now. They're as high as they were back in April. Around 20% is what the betting markets are showing as the risk that Chair Powell does get fired by the end of the year.
OK, this is a step change in terms of the pressure on the Fed chair. The two Kevins as well, keeping their public audition going for the top of the Fed, and we'll see if there's further commentary from them in the days ahead. Bloomberg's Vale Titel, thank you very much indeed. Here's what else to think about through this week. Tuesday, we get US CPI, so inflation print out of the US as markets start to pare back bets of a Federal Reserve cut in September. And from Tuesday, it is the earnings season kicking off in earnest with US banks reporting their numbers. And on Thursday, G20 finance ministers and central bankers gather in South Africa. We will be across that and on the ground for you, of course, through that summit. Coming up, President Trump says the US will send more Patriot air defense batteries to Ukraine to help defend against Russian attacks. A significant decision from President Trump. We get the details next. This is Bloomberg. Welcome back. President Trump says the US will send more Patriot air defense batteries to Ukraine, which Kyiv says are needed to protect against Russia's ongoing airstrikes.
I haven't agreed on the number yet, but they're going to have some because they do need protection. But the European Union is paying for it. We're not paying anything for it, but we will send it. It'll be business for us, and we will send them Patriots, which they desperately need.
Well, this comes as Axios reports that Trump will announce a new plan to arm Ukraine, possibly as soon as today. Let's get more with Bloomberg senior editor Balazs Pence. Balazs, Trump's been reluctant in the past, of course, to ship arms to Ukraine. What fundamentally then has changed? This seems like a major pivot.
Yeah, the backdrop to all this is, of course, that the ceasefire talks that Trump has been hoping for have not materialized, while Ukraine has been under increasing pressure both along the front line and deeper in the country under Russia's massive airstrikes that have threatened the civilian population. So what the Patriots can help with is obviously air defense. And its significance because these are some of the most sophisticated systems in the world. There are only about 200 of them in existence. And recently, the U.S. has indicated that they have been getting concerned about depleting their own supplies. So the fact that they're now willing to go ahead and ship these systems to Ukraine again is an important message to both the Ukrainian side, but also towards Russia.
OK, and we get that, of course, decision coming from President Trump as there are those reports that maybe this is a Trump administration looking to announce more long-term military support for Ukraine. We'll see if that announcement comes through later today. Bloomberg senior editor Balash Pence, thank you very much on the update there in terms of the context behind that decision. Significant, it seems, for President Trump to send those Patriot missiles to Ukraine. Coming up, as the US pulls back on its EV infrastructure funding commitments, we will take a look at the global electric vehicle outlook. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. BloombergNEF's latest electric vehicle outlook report says almost 22 million new EVs could drive off dealers' lots this year. 22 million. That's about a quarter of all vehicle sales. China remains the runaway leader, accounting for more than 2/3 of global purchases. Meanwhile, in the US, the outlook has fallen dramatically as Donald Trump's administration rolls back federal support. Andrew Grant, an analyst with BloombergNEF's Intelligent Mobility team, joins me round the desk this morning, bright and early on the Monday morning, of course. Andrew, turbulent times for the auto markets. Globally, then, the demand is still there for EVs, but it seems like on a regional basis it breaks down and presents quite a different picture. What are the top kind of headline numbers that jump out to you from this piece of research that you guys are putting out today?
Morning, Tom. So we are still headed for a record year for EV sales globally, but as you point out, that varies significantly depending on which region you're looking at. We take all the latest numbers and put that into our outlook, and you end up with these markets that are headed in very different directions in how fast they are electrifying. If you look out to 2030, you have a market like China where 80% of the vehicles in 2030 come with a plug, where somewhere like Japan, that number's just down at 11%.
Wow, there's a huge gap between China and Japan then. Are the policies, to what extent are they the main factor in terms of hurting or, in fact, helping to catalyse vehicle sales? How much does this come down to policy?
A lot of it's down to the uncertainty of different policies and how that tends to change quite quickly at the moment. It's difficult for a lot of automakers to do their strategic planning and actually put the right models into place. But also, policies affect cost, and cost is the main driver behind electric vehicle sales. You're seeing very different price premiums that consumers are paying for electric vehicles in different markets across various different segments. In China, it's cheaper to go electric, whereas if you are buying an electric vehicle in Germany, you're paying 25 to 60% more for a comparable vehicle compared to what you would get with an electric vehicle.
You're still paying minimum 20%, 25% more in Germany.
We model this out, so you will get specific cases where there'll be a bit of a difference, but on average and kind of model across different segments, it can be quite significant.
Where are the opportunities for further electrification then for road transport?
There's a lot of things that I could pull out here. We've noticed electric vehicle charging prices are creeping up, and there's a lot of work that can be done to push those down. There's new battery technologies that are rolling out, so sodium-ion batteries that are coming in kind of at the entry-level point of the market. Solid-state batteries are just starting to make their way from the top end. But something that I find quite interesting is you look at a segment like two-wheelers, which has electrified really quickly, but is really being held back by the motorcycle component of that two-wheeler segment, which it turns out is still quite difficult to make a really good long-range electric motorcycle. So we'll see some product announcements in the future, hopefully filling some of these gaps and pushing this forward. OK, look at four wheels and two then for some of the innovations that could come through. Andrew, thank you very much indeed. Well worth your time, of course, reading the report if you want to get a clearer understanding of some of the shifts in the EV space now and into the future. Andrew Grant from BloombergNEF, thank you. Now, some of the stories making the news this Monday. NVIDIA CEO Jensen Huang says the US government does not need to be concerned about the Chinese military using US technology to improve its capabilities. Huang told CNN that China will avoid the technology because it can't be relied upon and may be limited at any time. Amazon's Prime Day sale helped boost overall online spending in the US by 30%. The Adobe data includes sales for Amazon and competitors Walmart and Target, which hosted their own overlapping sales. But consumers mostly stocked up on household items rather than pricier goods like electronics.
Coming up, as trade talks between the US and European Union drag on, the EU is said to be stepping up plans to engage with other countries hit by President Trump's tariffs. More details on that next. This is Bloomberg. Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. US and European stock futures fall after President Trump dials up trade tensions, threatening 30% tariffs on goods from the EU and Mexico. Bitcoin surges past $120,000 for the first time ever. Tariff diplomacy. The EU looks to step up engagement with other nations hit by Trump's levies while delaying its own countermeasures to allow more time for talks with the US. Plus, President Trump says the US will send more Patriot air defense batteries to Ukraine to help defend against Russian attacks. So, equity futures pointing lower in the session today, given the tariff risk that's come through over the weekend. 30% is what's being threatened on the EU come August the 1st. European futures down by 0.6%. FTSE 100 futures flat as things stand. S&P E-minis pointing low by 0.4%, and Nasdaq 100 futures looking to drop around 0.4% as well. Let's flip the board and have a look cross asset. The dollar is bid. Treasuries largely stable so far in the session. The pressure on Jay Powell from the president continues. 441 right now on the benchmark US 10-year. Euro dollar a little softer in the single currency, down 0.1% over that, in fact, versus the US dollar at 116. And Bitcoin is on a tear, well above 120,000 right now, up almost 3% just in the session. Over 100% is the gain in the last 12 months for that cryptocurrency. And Brent at $70 a barrel and 52 cents, up 0.2% so far in the session. Now, the EU is said to be preparing to step up its engagement with other countries hit by President Trump's tariffs. Meanwhile, EU foreign ministers are meeting today to discuss progress on trade talks. Let's get more from Bloomberg's Oliver Crook, who has the details for us. Ollie, less than 3 weeks away then from this new deadline. What is the state of play?
Yeah, just to refresh everybody on kind of where we are, because the percentages are changing, the dates are changing. Initially, the EU is facing 50% tariffs on August the 9th. Now we're talking about 30% tariffs on August the 1st, so about 2.5 weeks away. And that follows that letter that came from President Donald Trump to the European Commission, to Ursula von der Leyen. And I'll just read some of the excerpts of that just to give you sort of the broad update here from the Trump administration, basically saying that the EU needs to reduce all of its trade barriers with the United States, bring tariffs to zero, but also reduce the non-trade barriers. That, of course, is the big difficulty in these discussions, Tom. But what we got in terms of details about how he's thinking about this, if for any reason you decide to raise your tariffs and retaliate, then whatever number you choose to raise them by, that will be added to the 30% that we charge. So that is where the Trump administration's sort of baseline is going into this. Remember, the European Union sort of had come to terms with the idea that there would be a 10% baseline tariff that many of the member states were not terribly happy about, but were willing to swallow without retaliation. The question is, how do they respond if you do get 30% tariffs? And we heard from Ursula von der Leyen, who gave some idea of that, who said, we remain ready to continue working towards an agreement by August the 1st. At the same time, we will take all necessary steps to safeguard EU interests, including adoption of proportionate countermeasures if required. And that will be the discussion before many of the ministers that are meeting today in Brussels to discuss, A, an update on those trade negotiations, but also, B, what retaliation looks like from the EU. We know they have a list of already 20 billion euros worth of goods to retaliate against the United States. We understand they will be adding another 70 billion to that in terms of possible retaliation to the United States. But the question is, how hard are they going to go in the lead up to these discussions that are about, a deadline that's 2.5 weeks away? As we know, the European Union would like to see a negotiated outcome. That being said, we do not know what's in the mind of Donald Trump, if he's really committed to this 30% rate, if it's just a negotiating tactic. So the EU needs to be prepared to retaliate if they must.
Just add and build on that then, Ollie, in terms of the potential consequences of a no-deal scenario.
Yeah, because you have the first line impact, right, which is the retaliation. So we've talked about it's 100 billion euros worth of goods. We understand the EU is looking at sort of moving on to the United States. Of course, this is always going to hurt the EU more than the United States because of the trade balance. The EU trades much more, sells much more into the U.S. than the U.S. into Europe. That is, of course, part of the whole reason that Trump has declared this trade war. But there are longer-term consequences. There's been a lot of discussion. We talked about in theory about the Europeans sort of diversifying their trade routes away from the United States. We know about the Mercosur deal with Latin America that has made progress and that may be signed at some point in the coming months. There's also, over the weekend, we had the leader of Indonesia in Brussels signing basically a political framework that would begin an open trade relationship, much more open with the EU and Indonesia. So this is part of that diversification effort actually moving forward. And then there's the third point, which is some reporting that we have over the weekend that the EU is looking at talking and coordinating increasingly with other nations that have been hit with the United States by trade tariffs. What that would actually look like, Tom, I think is a very fascinating discussion. Is this maybe a sort of G7-1 where you have Canada, the Europeans, South Korea, Japan, these kinds of nations working more collectively together almost against the United States? Of course, that would be a large escalation that the United States and Donald Trump would take very poorly. But at a certain point, a line needs to be drawn. And that is sort of the beginning of the discussions that we're starting to have. And that's certainly going to be one of the big themes here when we talk to ministers here at the G20 who will be discussing, obviously, trade as a sort of the primary issue that the world faces right now versus the United States.
Yeah, so to your point, we'll watch to what extent that coordination happens between the EU and some of those other trading partners and the significance of that. Meanwhile, German Chancellor Friedrich Merz, and of course this is your wheelhouse of expertise, Ollie, he's been spelling out what the threat of 30% would actually mean for Germany's exporters.
Yeah, and it's absolutely colossal, Tom. I think he sort of doesn't really have, every finance minister I've spoken to over the last couple of weeks and months, when you ask them what kind of impact is this going to have on the economy, they basically say it's incalculable. And that is basically the message that we got from the German Chancellor yesterday, speaking on the public broadcaster, saying that basically that would eclipse and overshadow everything else, and that the German export industry at its core would be severely damaged. What was interesting is in that conversation, he was also saying that this may put on hold some of the plans that the German government has in terms of their fiscal expansion and some of the turnaround plans for the economy. That could bear on that they might have to do some more immediate action in order to support the companies. So that is, kind of been the main message from many European finance ministers and leaders, is that the impact would be basically incalculable in the economies. We heard from Barclays putting out a note in terms of what the impact would be on the markets. What they expect is that the ECB would probably cut rates by a full percentage point by the first quarter if we do get those 30% and we get retaliation from the EU.
OK, Bloomberg's Oliver Crook, thank you very much indeed with the update there in terms of the potential impact on the EU from these threatened 30% tariffs. Ollie, thank you. Now, the European Commission, meanwhile, says any escalation of trade disputes should be avoided while calling for a level playing field. Competition Chief Teresa Ribera spoke to us earlier.
Trade provides prosperity, and I think it is a good thing. And in general terms, the global value chains are so obviously important for anyone that we should avoid any type of trade escalation, trade war among the different countries between the different geographies. But of course, we need to ensure a level playing field. We cannot keep our very open economy in Europe in such a context that there may be many people willing to be part of our single market, but that may not be working with the same rules, the same approach, so to reflect the right prices according to the real cost. So I think it is good to explore with the rest of the world how we can work together, and it is good to try to avoid this escalation with the United States. China is a great country. Of course, we need to be sure that investments flows are fair and that we do not harm each other.
When it comes to fair trade, what sort of message have you given to Beijing when it comes to overcapacity, not only on clean technology sectors, but also, of course, on rare earth exports?
There are two things that you are mentioning in your question. One of them is, yes, we need to ensure that the overcapacity, the production beyond what it may mean, the domestic demand could overflow over markets. That could be pretty harmful for those that also produce in other geographies. So we need to be responsible, and these formal and informal conversations between the different governments is going to be key. Then there is another issue that you are raising in your question. What about the availability of rare earths, raw materials that may be critical for the new economy, both in terms of the renewable energy solutions or in terms of the digital transformation of our economies? And it should not be a bottleneck, killing the possibility of prosperity all over the world. So that is another bullet where we will still need to talk, to discuss, to avoid harm.
When it comes to competition itself, given Washington's tariff threat of 30% by August 1st, is that going to hurt Europe's ability to compete in global markets in the United States? What are your expectations of what that could do to trade flows?
I think it is very bad news. I cannot understand how any country can think that getting isolated from the rest of the world is a good thing for its economy. To what extent fixing the way they want to produce, sell and cut the ties with other providers, suppliers all over the world is not good news for anyone. So I think that it is not good for Europe, it is not good for the United States, it's not good for anyone in the world, because the size of the American economy is so important that it would have an impact, of course. But it is also true that it represents more or less 17% of world trade. So we need to pay attention, to prepare, to be sure, to the extent possible, that this does not come a reality. But if it finally pitifully becomes a reality, we need to keep on working to build resilience and to build partnerships with the other partners, the other allies in the world.
European Commission Competition Chief Teresa Ribera speaking to Bloomberg. French President Emmanuel Macron is promising a new and historic effort to increase defence spending. He said in a speech that he will double the annual defence budget from when he took office to $75 billion by 2027. Macron says the move seeks to counter an acceleration of threats to freedom in Europe and the risk of outright war in the coming years. UniCredit says it will assess the next steps on its takeover plan for Banco BPM amid doubts over whether the deal will go ahead following a ruling by an Italian court. The court struck down two conditions imposed by Italy on UniCredit to complete its bid. However, it left in place other requirements that CEO Andrea Orcel had previously said could halt his takeover plan. Coming up, can AI models be compressed without compromising on performance? The Spanish startup Multiverse Computing says it has found a way. I'll be speaking to the CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, a Spanish AI startup says it's managed to compress LLMs, or large language models, of course, by 95%, up to 95%, without sacrificing performance. The development by Multiverse Computing would greatly improve, of course, the energy efficiency as well, and lower the cost of AI inference. That's when you effectively ask the AI models questions and get an answer. It's just secured this company new funding then to scale up the technology. The co-founder and CEO, Enrique Lizaso, joins me in the studio right now. Enrique, thank you for coming in to the studio. So you've raised, what, $215 million in a Series B. Talk to us about that funding, what it allows you to do with this technology.
Okay, $250 million allows us just to compete with the large AI model providers, just providing smaller, much smaller and more efficient ones. You need to have such a large, let's say, amount of money just to try to get into the market and distribute properly.
And do you see yourself competing then with the large language models that your technology compresses
Not
for your customers?
exactly at this time. We are not building super large models, something that we could do, but we are providing cheaper, half the price models, and then models for the devices, which is an untapped market so far.
And what is the business model then? Who are you shipping to? Who are your customers? How do you monetize this innovation?
Okay, that's easy. We just get some open source model, we compress that, or we can just tune it up as well. We compress and then we resell on a fee. Or we can deliver through the cloud providers, AWS, for example, API, and then we charge on the by the token.
And how deep is the technological moat in terms of your competitors, what you're able to do versus your competitors?
Yeah, I mean, this technology came from a completely different part of the science. We came from the quantum industry, and this is what is called quantum-inspired algorithms that came from a different part. So it's like the analogy is like if you are just still making just holes with a shovel, or if you use a machine just to do that. This is the example.
How much demand are you seeing for these compressed large language models?
For the compressed large, I mean, the market is going to explode. Look what's happening in the Netherlands. They are restricting the consumption of energy because of the AI. So this is happening right now, according to another news outlet like Financial Times.
Yeah.
The point is, okay, what are doing the small companies that want just to use a cheaper LLM? They have to use cheaper AI model builders, and that's us. On the other side, if you want a model just to be on your iPhone, on your, let's say, Raspberry Pi, or even in your drone, for whatever reasons you think that you can put in a drone an LLM,
yeah.
Okay, that means a super small, a nano LLM, which consumes very few energy. That's us.
And that's edge computing.
That edge computing.
Nano large language.
Yes, and this is a market that doubles the size of what we are seeing today in the cloud.
When does that market come and mature?
It's coming now. It's coming now. If you just have a look at our round, okay, you will see some names from device manufacturers, large American ones, someone starting with Hewlett and ending with Packard, okay, that is precisely on that. Okay. But we have more. This is the reason I'm just going to America also.
Yeah, and you're off to the US and maybe raising additional funding. Talk to us about, just break down the numbers in terms of the potential efficiencies on energy. We know energy is a major constraint in terms of these large language models. That's a key problem that you address. And then there's the efficiency, and then there's the cost. Just give us broad numbers in terms of what it means on cost reduction and energy and efficiency.
Okay. Compression 20 times, I mean, just the final model 5%. Energy savings, half. From 50 to 80% of savings. Cost, exactly the same as energy.
Okay. What does this mean? This is a threat, is it not, for NVIDIA and Jensen Huang?
It's not. Well, Jensen Huang is a very good, let's say, GPUs, but if you try to put Jensen Huang on a drone, do that.
If you try to put Jensen Huang
on a drone.
On a drone. You mean his chips? His chips on a drone?
I mean, probably it's going to consume all the battery just at the beginning.
Okay.
So this is what we are just, let's say, fighting now.
Okay, but NVIDIA CEO is touring the world and basically saying you need to build more data centers and more infrastructure.
Yes.
But you're compressing the models, so that means less data centers, less energy, less chip use.
I don't think that is going to happen that way. I think that we are going to still building data centers and more data centers. But have a look at from the point of view of that data center. You have the same energy, but then you can serve double the outcome, because we are just, for a fixed amount of energy, we are just serving double the customers.
Okay. How much competition are you facing from some of the big tech giants, like IBM, like Google?
No, Google, I mean, we arrived to agreements with AWS, for example, and we are just synergic with them, because they are serving the super large models, okay, but they fail. They are not serving right now the smaller models. And this is what we are just providing. In the future, maybe, but looks like those guys just are focusing on the artificial general intelligence and so much.
And you talked about the fact that you are quantum-inspired, your technology, quantum-inspired. How do you see quantum computing, large parts of it still unproven, quantum computing and AI, that story evolving in the next 2 to 3 years?
This is nearly a sci-fi in the sense that quantum computers are not powerful enough to do that. But yes, there are some scientific projects just to put a small LLM, our smallest LLM, inside a quantum computer from a French manufacturer and see what happens. This is going to work very badly, but that is going to be the first in a row. So at the end, if you put a super small large language model inside a quantum computer, which is, I mean, very dumb model, I mean, this looks like a million monkeys just with the typewriters. Maybe something, I don't know. I mean, this is sci-fi so far.
Okay, I've got an image of a million monkeys on typewriters now.
Yeah.
It was not what I was expecting necessarily on Monday morning. But Enrique Lizaso, thank you very much for being on that raise. $250 million with a focus on compressing large language models with the energy and cost gains on the back of that. Enrique Lizaso, co-founder and CEO of Multiverse Computing. Now, some of the stories making the news today. Elon Musk staying on technology, says he is planning a shareholder vote on Tesla's investment in his AI startup, XAI, of course. In a post on his social media platform, X, Musk said if it were only up to him, the EV giant would have invested in XAI long ago. Musk's comments come after the Wall Street Journal reported that his other company, SpaceX, had agreed to invest $2 billion in XAI. Hiring by UK businesses plunged at the fastest pace in nearly 2 years last month, as a survey suggests a rise in payroll taxes is having a significant impact. According to KPMG, permanent staff appointments fell while the number of available workers jumped. Meanwhile, a study by McKinsey says UK businesses are dialing back hiring for jobs likely to be affected by AI. It says vacancies in tech and finance are seeing almost twice the decline compared to other sectors. And Jannik Sinner has won his first Wimbledon title after beating Carlos Alcaraz. The world number one overcame the Spaniard 35 days after he lost to his main rival in the French Open final. Sinner, who served a 3-month doping ban earlier this year, claimed the 4th Grand Slam title of his career. Plenty more coming up. This is Bloomberg. Welcome back. So we have inflation data out of the US on Tuesday. We have, of course, the comments from President Trump hitting back against Jay Powell, at least ramping up the pressure on Jay Powell again over the weekend. And some of those contenders, the two Kevins, Kevin Hassett and Kevin Warsh, both critiquing the Fed chair as well. But on top of that, you have the adjustments in terms of how the markets are pricing in expectations of September. You just dial back to June and you were almost fully priced in terms of September being the next cut from this Federal Reserve. Those bets have now been faded. The last time I checked, the odds were about 60% for September. So question marks being raised over whether or not September is really in play for this Fed, or at least the chances of that cut coming through. The inflation data tomorrow, of course, out of the US will be informative on that. Headline basis are expected a print of 2.6% year on year. Let's flip the board and have a look at what's happening in terms of Bitcoin, because it is on a tear above 120,000 US dollars for the first time. Record highs now for the cryptocurrency. There is institutional enthusiasm again for the biggest value cryptocurrency out there. The gains over the last 12 months more than 100%, up close to 3% in the session today. 122,000, 125,000 for some is seen as the next level to watch. Let's flip the board and have a look at the earnings season. Of course, that kicks off this week with US banks in focus. And it's not expected to be particularly pretty in terms of second quarter year-on-year growth. Earnings growth seen as the lowest since 2023 with just 1.7%. Let's see, of course, if the earnings beat those estimates, but pretty subdued in terms of the expectations. Bloomberg Terminal users, of course, can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. The opening trade is up next. Stay with us. This is Bloomberg.